Gold is trading a little higher today, but it is coming off its most recent lows. We did see a rally a couple of weeks ago. We moved back up towards the 1480 zone, and since then we have rotated lower. Now that 1480 level was quite key for gold. That was previously a huge level of support, an area where traders struggled to really break below. But once we did break below that level a few months ago, it started to become clear that the trend for gold was weakening. And I say that based on the overall summer trend. We have to remember that at the start of the summer, gold was back around $1,300. We saw a really strong rally then up towards the kind of 1560 levels, and we have started to rotate lower ever since. Now, there was questions being raised only about a month ago about whether the rotation off gold, the correction that we had seen, has come to an abrupt end. But we have now started to rotate lower again, moving below that key 1480 level I've just alluded to, and then we started to hold up around 1450. From that level, we rotated back towards 1480, and this was always going to be a major test of resistance, and that resistance held on this occasion. We rotated lower again, and we're back in that 1450, 1440 zone. Now, again, that represents the most recent low, which came in around just in between those two levels, around 1445. But this is the next major test now for the yellow metal. Now, what's interesting is it's coming amidst very little news flow. There's an intense focus right now on the trade war between the US and China for two reasons, really. One of which is the fact that this is the major event, really, that's holding up the global economy, that's represented the cause of the slowdown that we have seen in the global economy, which is why so many central banks have been cutting interest rates. And it seems that we are nearing a deal, or at least we're nearing a phase one trade agreement, but things are being held up. And it seems that we're getting right to the end of it, but the finer details now still have to be worked out with regards to intellectual property and the removal of tariffs which have previously been imposed by the US. But again, these finer details are waiting, and traders are really just looking for any indication that we are getting close to this deal. We have to remember, again, it was a couple of weeks ago that this deal was meant to be signed. Then it was touted that it could come in early December. Now we'll be lucky to get this over the line this year. The other reason why there's so much focus on the trade deal is because there's nothing else to really focus on, of course, outside of the UK. Here in the UK, we have Brexit, we have an election, but outside of the UK, it's still very quiet. Central banks have made their big moves. The Fed has cut interest rates 3 times. The ECB has restarted quantitative easing and cut interest rates. The RBA, the RBNZ, all cutting interest rates. So with all of this having already taken place, the focus is just right back there on the trade war. So we're eyeballing every piece of commentary which we seem to be now getting on a daily basis, promising optimistic words, but not yet really leading to anything. What it has done, though, is it's pushed US equity markets back into record territory. So the sentiment has clearly picked up a little at the prospect of a phase one deal, which has really worked against gold, dragging it back towards these 1440, 1450 levels. And it's mainly this optimism around a trade deal, which is why people are a little bit more bearish on gold in the near term. If we see 1440, 1450 break, then 1400 starts to become a key level of interest as far as trade is concerned. But we have to remember, again, this only marks around 50% correction from the overall summer move, just to again draw light on just how significant that move over the course of the summer was. How this trade war is resolved, and whether this moves to a phase two, and what the impact this will have on the global economy, will then determine what moves we see in gold thereafter. Because if central banks are forced to keep cutting interest rates, if the global economy continues to slow down next year despite a phase one agreement, or if phase one agreement collapses, then that could be bullish for gold in the medium to longer term. But right now, I think the sentiment really is bearish in the market, and we're just waiting for those triggers, the next of which could be a break of 1440.